What's up, everybody? It's Monday, November 6th. How's everybody doing? I hope you had a nice weekend. So, not a whole lot to talk about today. Market closed higher, modestly higher. We had a good fiscal flow day on Friday. Friday was also a Social Security payment, so we had something like 34.5 billion leading flow and something like a 25 billion net flow. The deficit for November so far, and we're only a few days in, is about 116 billion. So that's very good. These leading flows are very strong. Actually, we are now up 62.6 billion over last year. I mean, that is significant. Now, I've been talking about the deficit, which of course is the net flow. That's the leading flow minus taxes that are drained out. That's down about, I think, around 49 billion or something year over year. At least that was the number as of last Thursday. But what I've been saying is that with these leading flows so strong, I think we're you're gonna see that deficit gap narrow, and eventually we'll go above. And that's good because, again, the deficit means a net transfer of financial assets to the economy. As a matter of fact, the flows are so strong right now. And don't forget, we got the November 15th quarterly interest payment coming up. In August, that last quarterly payment, that was 54.3 billion. So this month we're gonna have a significant spike in the leading flows. Okay, much bigger than last November. So I've been saying, like, usually when you see these quarterly interest payments, this spike in these flows, that's a good time to take profits because then it generally trails off. But we might be good beyond that date, going all the way into December 15th. Now, December 15th is going to be another quarterly corporate tax drain. But normally I was, and I have been saying, like, look to take some profits around November 15th because, that spike usually is the peak in the flows for this point in the cycle. Okay, remember, I give you a two-tiered analysis here. I give you these cycles, 4 or 5 times a year, and I give you these, the overarching, the big picture, the macro picture with, 7 trillion plus annually, 2 trillion deficits. I mean, you're just not going to have a recession with that kind of fiscal support. So I think now that November 15th, peak, we could still maintain some bullish momentum beyond that. Don't forget too that some of these monetarist zombies are getting triggered by Powell's, tone last week when he wasn't so hawkish, and the market is starting to price in. Well, it's already priced in no more rate cuts, and it's even starting to price in it already priced in no more rate hikes. That's what I meant to say. And it's starting to price in even a rate cut, maybe March or May of next year. So that, that's going to get a lot of these monetarist zombies moving in on the buy side. The other thing is that sentiment has been really negative. It's been really bearish. Last week in that AAII sentiment survey, that was the highest level of bearish sentiment in 11 months. And, we've been in this environment now of high levels of negativity for like the last 20 months, basically, because that has been the period where the Fed has been raising interest rates, and it just has kept everybody bearish. There was an interesting statistic, some data that came out. A friend of mine sent it to me early this morning about how, this has been the worst month or the worst period for stock short sellers since back in 2020. And again, I'm just going to repeat, folks, if you don't have the understanding, okay, if you just go with the crowd and you invest emotionally, that's what's going to happen to you. And don't think that these short sellers were all a bunch of inexperienced novice investors. You had a lot of big names on Wall Street in this trade, in this position as well. I mean, I'm still seeing it. I'm still seeing it. I'll mention again, I don't know how many times it's, if a keyword here, Ray Dalio. I don't know how many times recently I've talked about this guy, but I got to bring it up again. I'm sorry. But this guy now, he's out saying there's going to be a debt crisis because the government's going to be issuing a lot of debt in the fourth quarter, and he doesn't think enough people are going to be there to buy it. And again, I've explained all this. The money is already there. We got, 3.3 trillion in reserves being held by banks, and another, a trillion something in that Fed RRP, reverse repo facility. The money's already there. When Treasury sells securities, bonds, notes, whatever, all it is an asset swap. They're just exchanging government securities, which is a dollar equivalent, for reserve balances in the banking system. The money is already there. So there's not going to be a problem with this. And this guy, again, I have to mention it because he's at the top of the mountain when it comes to, if you're going to talk about hedge fund managers. He was running the biggest hedge fund in the world, this guy. Now I don't think he runs it anymore, but I mean, and he's quoted constantly. They bring him on all the financial TV shows. He just does not understand. And so, but again, this is good for us. When you see this kind of ignorance and when you see this level of misunderstanding, especially when it comes from people, like Dalio, who are highly regarded in the investment world, if you want to call it that. And his comments cause people to react a certain way. It sets up really, really nice opportunities for us. Because again, all we're doing here is taking advantage of people's lack of understanding. And it's not simply, it's one thing if it would be like an innocent lack of understanding. But what's really egregious about this is that they have bought in or married themselves to a kind of a mythology and are, they're just loath to change it. They will never change it. They're going to stick to it. I mean, we saw it the entire way with the Fed rate hikes, where from the get-go, I was telling you guys that's not going to that's not going to work out the way they think. It's not going to work out the way they think. Again, all of their analysis is this single variable analysis where they totally ignore accounting, basically. For every debit, there's a credit. For every liability, there's an asset. For every debtor, there's a creditor. I mean, they ignore the other side. Same thing with inflation. Somebody pays more, somebody gets paid more. The income doesn't fly out into outer space. I've said this a million times. So here's Dalio at the top, and we saw also last week Gundlach, basically saying the same thing. Both of these guys are at the top of the mountain when you talk about the Wall Street, and they're clueless. They're clueless when it comes to understanding what is going on. And worse, they will not have an open mind to hear anything else but this kind of nonsense that they talk about. They're constantly wrong. And I'm telling you this right now, if Dalio is short the Treasury market based on this idea that, there's not going to be anyone around to buy him, then he's going to have a big, big loss. And I'm not trying to be a sadist and wishing for him to have a big loss, but at the same time, maybe he would learn something from this. Maybe he would go back and reflect on why it didn't happen the way he thinks it's going to happen. Maybe. I mean, I doubt it, but who knows? And what happens if he's right and nobody bought the bonds, okay? Let's just say, man, maybe some of you would like to ask me this question. Well, Mike, what if he is right? And what if nobody in the whole entire world buys the bonds, even though the money is already sitting there in bank accounts, earning a lesser interest rate? Just let's say nobody stepped up to buy them for whatever reason. Okay? Well, then there's the Fed that sets a policy rate. And if that policy rate started to go up, the Fed would step in to maintain their policy rate. That's ultimately, it's the monopolist at the end of the day that is going to determine the rate. But that's not even going to happen. I mean, it's not even necessary to discuss that because it's just not even going to happen. I mean, if investors can get a higher yield holding government securities as opposed to cash, they're going to buy the government securities with the money that is already there. So next time, if somebody says to you, what if nobody buys? What if the answer to that is the dollars to buy government securities comes from government spending itself. Okay, I'll repeat that. The dollars to buy government securities comes from government spending itself. When the government spends, reserves accrue in the banking system. And when the government sells securities, individuals, institutions swap those reserves for government securities, which are basically cash equivalents that earn a higher interest rate. That's how it works. Okay? Again, you cannot drain a swimming pool until you put water in it. That's the easiest analogy to use if you try to explain it to somebody. You cannot drain a swimming pool until you put water in it. If there's no water in it, how do you drain it? Okay? The government has to put the dollars into the system first before it could sell any treasury securities. Same thing goes with taxes. I said this before. People don't like hearing this because it is uncomfortable paying taxes. I don't like it. Nobody likes it. But the dollars have to be in the system for anyone to pay their taxes. It's just like the Monopoly game. The game has to distribute the money first before anybody can play the game. That's just a reality. So anyway, it's looking pretty good. We're going to have a real sharp spike in the fiscal flows this month. And I think that could, we can ride on the back of that almost all the way till December 15th. But, again, I keep track of these numbers every single day. So if it starts to trail off, I'll know. Anyway, that's it for today, folks. Hope you had a good day, and see you tomorrow. Bye.